Hi there, this is Chris from MoneyHub, and this video overviews secured loans within New Zealand. So many people ask us, what's the difference between unsecured loans and secured loans, and what one should I go for? The answer really is an unsecured loan is a loan which has no security over it. So if you don't repay the loan, you'll be chased by the company that you borrowed it from, and then most likely to be a debt collector. Whereas with a secured loan, the loan is secured over some collateral. That could be a car. If you borrowed for a car, that could be anything really, and it could also be your home. So what we've put together is a very comprehensive guide, and we've looked at what the risks are for anyone taking a secured loan, but we've also looked at the benefits as well as the alternatives. So first of all, what are the risks of a secured loan? Well, as I said, if you don't repay it, then your lender has the legal right to sell your asset that you've secured against the loan. This can be quite a serious thing. If it's secured against a car, then of course the car is going to be repossessed, and suddenly you don't have a car. If you have a loan that's secured against a home, and then suddenly you can't make, or gradually you can't make the repayments, then once again the home is going to be called on, and that is also a very sort of destabilizing situation. And so this is why secured loans have lower interest rates and the lower risk to lenders, but the consequences of not repaying can be quite devastating. So with secured loans, like unsecured loans, they'll have a fixed interest rates, they'll have a fixed term, so you know how much you're paying per week or per month or per fortnight or whatever. But you do need to make those repayments. Otherwise, there is going to be a question around how safe is the security that you have, because the lender will call on it. That's a very roundabout way of saying if you don't make the repayments, you're going to be in a whole bunch of trouble, because the lenders are going to be very quickly on you to get the money in or sell the asset. So what we've also covered is what secured loans cost. So the cost of it's going to be driven by the interest rate, and it's also going to be driven by the length of the loan. Those are the two major factors there. So if you have a loan, say at 15% for 3 years, the total cost of the interest is going to be X. But if you have that loan for say 5 years, then there's going to be a lot more interest charge overall. So the loan is going to be more expensive. This is why people who take out short-term, like 6-month or 12-month secured loans, pay a lot less than someone who takes out a long-term secured loan. There's also going to be some sort of application or arrangement fee. This can usually be around $150. We've seen some up at like the highest $600, with some lenders even more. And that's really just the fee that the lender takes, to arrange the loan, being the other documentation required, the processing, and just overall overhead being charged for. There's also going to be most likely a PPSR fee, and that is the fee for registering the security. So when you say, okay, I'm going to secure my home, or I'm going to secure my car, then to be able to do that legally, there is a fee which is usually charged to you. Sometimes the lender will pay it, but that's not that common. How much can you borrow? The answer there really is, for a small secured loan, it's going to be from around $5,000. We've seen loans are secured two and a half, and then of course if you're pledging your home, then you can borrow a lot more, but of course that comes with huge amounts of risk. So this is something never to rush into, of course, even if it's a small amount of money. Because of the consequences that you can face if you don't repay. And what's also worth knowing is that you have to have equity, in the loan balance. So if you're securing against, like a house and it's got 100% loan on it, then that's not going to be accepted. You do need to have money so that the lender, can actually sell something and get their sort of realize what they're owed from that. So just be aware of that if you have recently bought a home and it's gone into negative equity or something like that, then it's going to be tricky to get a secured loan attached, because the lender won't see a lot of upside should something happen. So just as a background here, we define secured loans versus unsecured loans. First of all, secured loans are tied to an asset, as I previously said, and they usually have a larger loan size balance, just because if there's an asset behind it, then there's less risk to the lender, so they can go a bit higher. And usually they have lower interest rates, just because once again the risk is lower. But for unsecured loans, they have the benefits there is that if you default on them, there's far fewer consequences. Of course, your credit history will be affected, and it most certainly will make borrowing in the future a little bit more tricky. But with unsecured loans, is that you're likely to get a smaller loan balance, as well as the interest rate being higher. That's just because the risk is high, so relatively higher to a lender. How much to borrow is a very, very common question. And whilst when we talk to lenders, they basically said that the most popular reasons for unsecured loans were buying a new car, home improvements, or similar. And we've also seen a debt consolidation, just because people want to clear off perhaps credit cards, or clear off a whole bunch of store debt, or just a whole bunch of annoying debt, do it in one go, and basically secure it with a lower interest rate against their car or against something like that. So this way they can lower their ongoing interest costs and then pay it all back. The risk is if they don't repay, then they lose a car, whereas a credit card, that's never secured debt. What really the answer is to work out how much you need to borrow, and then decide your payback period. The worst thing you can do is be optimistic, because things do change in life. You may, get reduced hours, have to take a pay cut or something, or anything like that, which will affect your overall affordability and sort of repaying it. So do be aware that it does sound good to be able to repay it in 12 months, but if it's going to be a stretch to do that, then it's far less costly with a secured loan to extend it. And that same sort of information applies to unsecured loans as well. Make sure, as I previously said, do allow for things that you don't foresee. We've suggested multiply 1.5 what you receive as the interest rate offered, just so you can sort of stress test that. A lot of people have gone into loans. We can see a story here this is dealing with mortgages, where people fixed it low interest rates, and then basically the prices, or so the interest rates went up. But it's the same way is that you can fix it at reasonably good interest rate for a secured loan, and then find out that you can't repay it because the term was too short, and you've got other financial commitments. So just be aware that these things do happen, and never even if you're securing for a 3-year period or even a 5-year period, there's always risk. What we always suggest people do is shop around for the lowest interest rate, just because what we see is a huge variation between the cheapest and the most expensive. It's absolutely enormous. So we suggest people just make some applications, see what comes in, see what sort of fits people, so sort of see what sort of feels comfortable, and just really get an understanding of what's out there in the market. The worst situation is when people just take 1 or 2 offers, or click on an ad or something like that, and just take a loan out, because often that is not going to be the cheapest. So those are some things just to be aware of. Summing up now the secured loans pros and cons. So pros, as I previously said, they have a low rate. They usually have a low rate of interest compared to unsecured loans. You can borrow a large sum. Credit history isn't so important if you have strong security. They really do, the lenders do look around affordability. At the same time, loan approval rates are much higher, just because you've got security for it, so there's far less risk for a lender. The cons are, it's really, really bad news if you don't repay. I cannot stress that enough. It is very, very scary. Please do not rush into these things, because you could lose your car, which can affect your job, which can affect your home repayments. There's a whole bunch of flow-on effects. So if if you have any doubt at all, please don't rush into these things and don't proceed. There's always alternatives to a secured loan, and you may not need one after all, or actually at all. So please just don't rush in. Usually a secured loan secured loan eligibility is based on age. So you do need to be between 18 and 65 and working, non-bankrupt, things like that. Security, you have to have a security. It can't be someone else's. It's got to be yours, and it has to have a measurable value, and it can't be it can't be a broken down car. It can't be something that can't be sold. So just be aware of what you can actually pledge as your collateral. And then affordability, as I said, this is really, really important as well, because lenders under the CFA guidance now, which is a government change from 2021, there is a far stricter testing done on affordability, especially now interest rates are high as well. So banks and lenders don't want to be lending to people who can't afford to repay them. And that's why affordability is a big thing now. I mean, it always was, but now it really is. Now they're also looking at the loan to value ratio. So if you have a home with a mortgage on it and it's 100% sort of mortgage because of the valuation may have gone down, then it's very unlikely you'll be able to secure anything against that home, just because there's no equity in it, as previously said. So just be aware that lenders will look at these things. So what I also suggest, having a look through our best secured loan offers, we update this near weekly or whenever we see announcements. We've listed a whole bunch of trusted lenders and everybody there. I mean, all the big banks, everyone, and the alternatives. So just be aware that what we see is the interest rates when they're stated here, they're not going to be always the ones that you're offered. Actually, it's most probable that they won't be, just because the banks and all the lenders have a starting rate, but then they'll assess your affordability and your sort of credit history and then they'll offer you an interest rate based on that. They'll also offer a fee to get the loan. That fee is consistent between borrowers because it's a standard fee, but the interest rate won't be. You then can choose the term based on also what the lender suggests, but you always have the power to choose the term when an interest rate is offered. Now there are many alternatives to secured loans. We've listed two here. So if you're looking at doing a secured loan for home improvements or anything like that, then some people just add that to their mortgage term and just draw down on their mortgage to do it. That does have long-term costs. I mean, for example, if you're offered a 9.5% secured loan, but your interest rate on your mortgage is 6.5%, then the 6.5% does sound cheaper, but if it takes you 20 years or 15 years to pay it off, then it's a lot more expensive. So there's also things like revolving credit mortgages, which works very similar to like an overdraft using your home. We've got a dedicated guide to that, which I suggest reading and which I've also linked to below. And then for smaller amounts, so these are your non-home related things. They could be cars, they could be all sorts of things. Unsecured personal loans, often cheap and easy. We're not suggesting that you apply for one, which just, that is one alternative. Guarantor loan, this can often be a little bit challenging if you have a strong sort of family issues or anything like that, but if you can get a guarantor to be able to actually guarantee the loan, then that can be a much cheaper way than going for a secured loan. So that's something to just sort of consider on a case-by-case basis. Credit cards, we're not huge fans of credit cards for anyone who can't make the monthly repayments. That to us is like the worst example of something to get, and so we are anti-credit cards in that sort of stance. But sometimes they can be a lot cheaper and a lot more sort of relevant to someone looking to get a loan, just because you may be able to get a 6-month interest-free offer, but the problem is you always have to make those repayments during the interest-free period. A lot of people don't, and then they leave it, and then suddenly there's interest on it, and that interest will be like 25%. So just be aware that if you do see anything 0%, there's a strong risk that it's probably not going to be 0% forever, and so that needs to be repaid. Debt consolidation loans are also popular, and that's something to consider. Lots of sort of alternative lenders offer them. And they are usually around a little bit higher than secured loan interest rates, but those will depend on your affordability as well, what you're offered. We've listed a few frequently asked questions that we've been asked and just generally helping to explain secured loans further. So how easily can I get a secured loan? The answer there really comes down to your affordability. How much do you earn? What are your assets? And basically, can you make this work? If you're high risk, then it's going to be less likely. If you've got loans in the past and had problems repaying them, then that's going to also be an issue, even if it is secured. Lenders don't like risks, and especially people with sort of not a sketchy history, but anything that kind of gives them something to be concerned about. How can you apply for a secured loan? The answer is just work directly with the lender. We suggest getting many quotes just to see what's out there in the market. That way you can really make an informed decision and not just go with something like that you see advertised on Google or anything like that. Just properly compare the market. Can you pay off a secured loan early? That's a very popular question. Many people do, which we're really happy to see. Sometimes, someone will take out a $5,000 secured loan for say 2 years, then repay it all in 6 months, which is a fantastic achievement, and it's a really, really positive way to save lots of ongoing costs such as interest. Some lenders will let you do that without penalties. Some will charge you, so do ask and see what's in the terms and conditions with regards to early repayment, because you never know when you'll have some extra money to be able to do that, and it straight away will lower your interest costs and your overall cost of the debt. Now, finally, is a secured loan better than like an unsecured loan? The answer is that really depends. Sort of what you need the money for, how much you're borrowing, what the terms are. Usually secured loans, of course, are going to be lower interest rate, but of course the risks are there if you don't repay it. So there's no real answer to that. It really is just assessing what's right for you, and then what's the best secured loan. We suggest making the applications to see which interest rates come best. We've listed, of course, in this guide, top picks and everything like that, but they're going to offer all the lenders on this guide or anywhere that you can find will always offer you a specific interest rate, and that will vary between lenders. And lastly, what happens if I can't pay back a secured loan? Well, that is the big problem. Your security or your collateral will be called upon, which means your car will be repossessed or anything else taken from your home, or your home even sold too. So, that's if your home is used as security. So do be aware that this is a major issue, and it's a big risk here, which is why many people shy away from secured loans even if the interest rates are lower. But just be aware that the consequences can be incredibly life-changing. So finally, in our conclusion, we've said secured loans have lots of benefits, but if you're not able to repay, if there's any chance that you won't, then unsecured loans are much safer. And of course, if a secured loan is for you, then make sure that you're checking everywhere to make sure to get the best interest rate. If it's not for you, then there's plenty of alternatives, and I've listed a guide to unsecured loans in this video below. So please let us know if you have any questions. We really want to get these guides as comprehensive as possible, and it always helps us when someone on YouTube comments and asks a question, also when people email us. So please do that, because it really will help everybody know more and learn more if we can make improvements to for anything that's not clear. Thanks very much for watching, and do let me know if you have any questions.